So welcome to the Trading Communities video, and this is a concept video for volume spread analysis series. And in this particular concept video, we would be talking about a pattern called a shakeout. So this particular pattern is often used by smart money to trap weak holders. Now let's understand what is shakeout and how retailers get trapped in this particular feature. Let's get on with the theoretical part first, and then let's get on with some of the practical examples, just like I have given in buying climax, stopping volume, and so on. Right now, shakeout is considered to be signal of strength, and it is a method often used by the smart money to kick most of the weak holders out of the markets by hunting the stop loss orders on their long positions in an uptrend. Shakeout usually occurs in an accumulation phase where smart money tries to absorb as many orders as possible for the further up move. So right now we have Nifty 30 minutes charts right here, the Nifty futures, and right now we have one of the shakeout examples right here. So what is actually a shakeout? I already told you, shakeout is where smart money tries to kick out the weak holders out of the markets. So in simple, all I can say that there is an accumulation phase right here, right? There's a complete accumulation phase right here up to these levels, and suddenly there is a down move. Okay, then market is just going on, going up, and suddenly there is a down move. So after this down move, all weak holders right there, aka the retail traders, they would have panicked and they would have started selling, or at the same time, if they are on a long position, if they are already on a buy trade, they would have had their stop loss below these levels. Or what happens right here, after seeing this huge volume on a breakout, okay, usually the price action traders, they think this is a breakout because the closing is below the levels. By the way, even if there is a wig, there are some weak holders, there are some no-wise traders in price action, even they would have thought, oh, there's a breakout with a huge volume, some huge smart money have entered right here, so I'm gonna create my sell positions right here in Nifty. Then what happened right here? Exactly, then after that there is a upper bar right here. There's an upper bar right here. After that, then market started going on a higher highs. So this is how shakeout happens. So shakeout is nothing but when there is an accumulation phase, market suddenly creates a down move or an up move. In a distribution phase, market creates an up move. In an accumulation phase, market creates a down move. Once it creates a sudden down move, usually the weak holders get trapped, and then later on smart money realizes there is no weak holders right now, then smart money starts creating a up move after a while. So now let's go to some more examples to understand more. Now look, in this particular example, as you can see, that market is actually slowly it's going up, and suddenly there is a down move, right? So you can compare the spread right here. So spread of this one particular bar and compare all the spread around these levels, right? So as you can see, there's a normal up move right here, and suddenly there's a down move. So to test whether there are to trap and to kick out the weak holders right here, who would have kept the stop loss below these levels once if they have created their positions right here, as you can see, the volume has been increasing right here. It's a clear sign that some players out there, they are actually creating their positions right here. So once they are creating the positions, their nearby stop loss would be these levels. So once their stop loss has been triggered, and again the confirmation bar as a up bar, and market started going up. So this is the concept of shakeout. And again, let's see one more example for a clear explanation. Now look at this. It's a beautiful example for a shakeout in terms of a continuous shakeout. So what is a continuous shakeout? In simple, this entire phase is an accumulation phase because we had a huge volatility zone right here. First thing. Second thing, volatility zone, you can consider this as a good support. Okay, this is a support area where buyers has the potential to enter right here. Now, as you can see, constantly market is actually trying to create an absorption phase right here, and suddenly there is a down move. Then market went up and trying to create an absorption phase, and suddenly there is a down move. And again market created a accumulation phase, and suddenly there is a down move. But why is that? Why is this happening again and again? Because constantly market is actually trying weak holders again and again, whether there are weak holders, whether there are some sellers out there who we want to kick them out of the market so that we can actually start buying right here and create an up move. So what happened after that? After 3 attempts right here, market actually created a good up move right here. So this is how shakeout actually happens in the market. So this is actually a futures chart, and usually what happens is in futures and options, usually there's a gap ups and a gap downs. Even fundamentals might occur in the markets. So I would recommend you to look for shakeout examples on stocks instead of Nifty and Bank Nifty. Yes, definitely there is a trap in Nifty and Bank Nifty also, but I would recommend you to look for examples in stocks. Okay, now let's see one more example. Now this particular example in Titan daily time frame, I wouldn't consider this as a shakeout, but still this you can consider this as a test. Okay, so a supply test you can consider as a supply test also, you can definitely can consider it. So right now, what is the scenario right here? First thing, market was creating a accumulation phase right here. Second, market, okay, let's forget this. Now let's look from these particular levels. Now market came down these levels, so the maximum levels market was reached around 2231 rupees, right? Then what happened? Market went up. Now market feels that okay, now I have enough strength to create a up move right here. So to create an up move, they have to create a cause right here. They have to observe more and more orders for a possible up move right here. Then what happened? Market started creating their particular absorption phase right here. So this could have been an absorption phase and market should have gone up right here. Then what happened right here? Exactly, market created a phase, but market came down, tested the levels below these levels. Okay, tested the levels below the 2231 to check whether there are sellers or not, whether there are weak holders who are actually keeping the stop loss or not. Once they had a confirmation, they had a continuous up move right here. Even without creating a higher highs, they completely created a higher highs right here without a swing. So that's the aggression of smart money right here. Once they got a confirmation, like okay, fine, there are no particular sellers right here who are below these levels, now I'm going to create my buy positions, and they started creating the buy positions. And one thing you have to observe right here is this is a continuation signal called a no supply. Okay, as you can see, the volume is lesser than the previous 2 bars, and the confirmation bar right here is an upper bar right here. So what is a no supply? It is something that I'm going to teach you. If you want to go, just type in Google what is no supply. If you want me to make a video on no supply, definitely you can comment in the comment section, and I'll be making a video in the upcoming days. So that would be the continuation signal for you, and that would actually give you more confidence to enter the trade in the market. Now, the final example for the shakeout. Now look at this. Isn't it a beautiful example? After this one particular bar, do you think as a retail trader, you would have thought, oh my god, the market is falling, even with the low volume? Now as you can see, this you can't even consider this as a signal of strength, because the volume is completely low right here. But this is a shakeout. Okay, so that's why I already told you, even in the first phase of the theoretical part, where you can consider a shakeout with a ultra high volume or a low volume also. All it matters is the structure, how the market is facing. Now market is literally on a accumulation phase right here. Now then there is a sudden down move right here. Some price action traders, breakout traders, okay fine, now we are going for a selling. Now what happened? Completely market went down. So this is how you should consider shakeouts. So don't get panicked as a retail trader. Okay, wait for the confirmation. What is the confirmation bar? An upper bar. Okay, it could be an increased volume or a decreased volume. I would prefer increased volume. Okay, when there is an upper bar, and where you should wait for the confirmation. I would recommend each and every safe traders out there to trade above the shakeouts. Okay, I would recommend you to wait for the market to reach above the shakeout, then you can trade. So this is how I would recommend each and every one of my subscribers to trade, and at the same time to trade safer and not to get panicked when there is a shakeout in the market, because you know now you know the concept what is a shakeout. And suddenly if you're getting a huge down bar and then the confirmation as an upper bar, wait for it. Don't create a new positions, or at the same time if you had a stop loss it's absolutely fine. Have a small stop loss. Let's assume that you have taken a trade right here. Keep your small stop loss right here. That's it. If you had a stop loss it's absolutely fine. But if you're taking a second trade, make sure your shakeout, the price goes above the shakeout, and then retracement and bond market goes up. So you can create their positions right here or right here, anywhere, but make sure you are trading safe first. So that's it for this video. Thank you so much, and we'll see you in the next videos. And if you liked it, please like, share and subscribe, because 60% of the people who are watching the video are not subscribing. This is viewing. So that would actually motivate me to make more videos for you guys. So that's a humble request from my side. And thank you so much. We'll see you in the next videos. Goodbye.